Bitcoin sitting right under 60,580, and that one close decides whether today's bounce is useful or just bait. I'm Chris. Welcome back to Bitcoin Whale. The job today is not prediction. It's position management. Know where the trade is wrong before the chart makes you emotional. My map is simple. Above 60,580, bulls get a real shot. Below it, I'm treating strength as a place to be careful, not a place to chase. Quick accountability note. Yesterday, Bitcoin was at 60,084. Today, it's at 60,173. Basically unchanged. No trigger fired, so yesterday's setup carries straight into today. Subscribe if you want these levels mapped before the move, not after the candle is already gone. Today, the chart is giving us a narrow decision window. On the 4-hour, the first thing I care about is this descending resistance coming into 60,580. More than 5 touches means traders have noticed it, but they still haven't beaten it. That matters because every rejection from 60,580 compresses the market. Compression is not bearish by itself. It just means the next clean close probably travels farther than people expect. Now I'll mark the Fibonacci retracement from 65,623 down to 58,115. I don't use this as magic. I use it to see where trapped buyers usually defend a bounce. The important zone from that map is 60,983. That's the golden pocket area. If Bitcoin can't even reclaim 60,983 after spending this much time underneath, the bounce is still suspect. So the story is already pretty tight. Price is under 60,580. The heavier retracement band sits at 60,983, and the market is trying to look healthy without proving it yet. Let me drop to the 1-hour for the entry, because this is where the risk has to be precise. I'm watching a short at the 60,500 level, stop 60,997, target 58,685 with 3.7 R. That trade only makes sense because the stop is above the rejection area we just mapped on the 4-hour. If Bitcoin accepts above 60,997, the short idea is wrong. No debate. What I won't do is short the first red candle late. If price dumps from here without giving the 60,500 area, the risk is already gone. Chasing after the move is how a clean setup turns sloppy. Same on the other side. I don't want to buy into 60,580 just because a small candle turns green. Bulls have to close above it first, then hold it. Otherwise, it's just noise wearing a nice jacket. Back on the 4-hour, the bull scenario is a close above 60,580. If that happens, the larger bull target on this menu is 75,623, but I would still expect pullbacks along the way. The bear scenario is cleaner. A 4-hour close below 58,369 confirms the floor failed, and the larger bear target becomes 43,325. That's not my intraday target. That's the bigger structural risk. The no-trade scenario is probably the most boring and the most useful. Bitcoin chops between 58,369 and 60,580. In that range, patience is a position. It just doesn't feel like one. If this helps you avoid chasing the middle of the range, a like tells me to keep the trade plan this direct. For me, today is simple. Respect 60,580. Don't argue with 60,997, and don't force a trade inside dead space. Trade the level, or let Bitcoin waste somebody else's afternoon.